Hi folks, we are going to come with our 21st edition of Market Outlook, Stock Reviews and Stock Recommendations. This time, apart from covering 3 market indices, we are going to come up with 3 recommendations and 6 stock reviews. There would be a lot of good discussions, a lot of insights about stocks, what you should do and how you go about. We are now going to take up the Nifty. We are using 2 types of charts, the weekly chart as well as the daily chart. We are giving emphasis to the weekly chart because it's a weekly stock recommendations, and studying the weekly chart you get to understand what is happening. As we said in the previous edition that 20,250 to about 20,400, this is the range where major resistance because of daily chart Fibonacci as well as weekly chart long-term Fibonacci. These are the 2 levels. We have seen a top of 20,222, and after that it has already come down below the 19,000. It has come below even further. It has posted a close below 19,700. Where is it going? As we emphasized last week that the daily chart 2.618 times Fibonacci is at 2248 and weekly chart Fibonacci was at 2390. We have seen a top 2222. The kind of movement that we have seen in the Nifty, it suggests that probably we have already seen a top. However, this top is still in the realm of possibilities that it needs to take out its 9-week moving average at 19,590. Only when we see the 20-week moving average, which is at 19,186, if that gets taken out, then we might say that that a top has been made by the Nifty. It is quite plausible. Well, the full confirmation will only happen when the bottom of the intervening earlier top, which was a lower top around say 18,867, that top, and the 20th March bottom that was around say 16,828. When that gets taken out, then the weekly chart top would be confirmed. But on the daily chart, we would say that if it were to fall below say the levels of 18,867 or so, we would consider that a top has been made. Roughly, we would say that the 50-week moving average around 18,486, once that gets taken out, we would say that probably we have seen a top already. But now the thing is that if you look at the 14 RSI, that is the 14 weekly RSI, that is also showing a negative divergence. Also, this is not a class A negative divergence in which the 2 peaks are the second peak in the 14 RSI is significantly lower. In that case, it would have been a class A negative divergence, but this is class B negative divergence where the peaks are the same, but that shows that there is a diminishing momentum that is clearly visible, and the pressure that is now being seen in the Nifty is pretty much it is pretty strong, I would say that, and just as the Bank Nifty, you will see in Nifty the first fall after posting the top, the first fall, the significant fall that happened, that actually breached the 9-day moving average, which normally supports any uptrend. That was breached with a gap, and after that the next 2 days also had been red candle days. That means there had been bearish days. The close is lower than the open. And finally, even 20-week moving average, the 20-week moving average was also breached. 20-week moving average was at 19,700 and it closed at 19,674. So we need to see how it behaves on Monday, but it definitely suggests that probably we have seen a top. As I mentioned right at the beginning, that the 2222, the top, is of course lower than the two Fibonacci's I have been referring to, 2248, which you can see on the daily chart very clearly. This is a 2.618 times Fibonacci. And on the weekly chart, that same Fibonacci with a different entry, different start and end point, that is at 2390. So it did not get into that Fibonacci zone, two Fibonacci's there. It has posted a top earlier and now it is like it is falling. Probably those ranges, that range between 222 and 2390, it is unlikely to be seen again, at least in the near term, and probably we would see fall below 19,200. That would confirm this top, and suffice it to say that you should lighten up your positions. Speculative positions, definitely lighten up, and weak counters that you have been gathering or accumulating, at least book part profits or at least reduce your positions. Even if there is not much profit, you must do that because things are not looking that great. Now is the turn for the Bank Nifty. The Bank Nifty, in the earlier edition, I thought that it might actually cross that 46,369 and it may make a beeline to scale up to 46,700. But my expectations had been belied. I could not read it right. What happened? It started going down, then there was a big gap down. It fell below its 9-day exponential moving average. It has started moving down and down. It is closed even below 45,000. Have we already seen a top? Where is it going? How do you look at the bank stocks? On the one hand, the PSU bank stocks are moving up, but Bank Nifty doesn't have so much of PSU stocks in it, whereas major private sector banks are there. How are they behaving? Continue to watch. We are on to our study of the Bank Nifty. First of all, we must tell you that we could not envisage that the Bank Nifty would become so weak within a week's time. Only 1 week and it became so very weak. I was thinking that it would actually cross 46,369 and maybe 46,700 kind of levels would be seen. But what we now notice is a different thing altogether, that it could not even test that 46,369 high. Last week the high had been 46,252 and it closed much lower, 44,617. So it is a big fall, and later when you see our stock review studies, you will see that major bank stocks showed so much of weakness that has never been seen, at least in one bank after perhaps 1.5 years. That kind of weakness has been seen. So banking stocks are really looking weak. But mind you, this banking, when we say that banking stocks are looking weak, we are referring to the private sector banks. Private sector banks are all looking weak, whereas the public sector banks are actually on a cruise. They are moving up, but private sector banks, because they have so much of weight in the bank nifty has shown so much of weakness. The weekly chart shows one very clear thing. On the ellipse above you see the price movement, and the ellipse at the bottom end, on the bottom in 14 RSI, you can see that how the weekly 14 RSI has behaved. There is a clear sign of negative divergence, lower peak, and the RSI finally moving close to about 50, and there was a good amount of a fall on this day, throughout the week. So bank nifty definitely looking weak. On the daily chart also you see considerable weakness that has been seen. It was posting gaps, and these gaps actually suggest, since this is the second top, this kind of a top happens for attesting that the earlier top is the real top, and this is a retracement to the earlier tops. That's why this could well become a double top, but for the double top this is only a tentative double top. When we see that it falls below the low between these two, intervening low between these two tops is that 43,600 levels. Once that 43,600 levels are breached, those at that point of time we would say that the bank nifty has actually posted a double top. Bank nifty suggests as of now that the 200-day moving average, which is currently located at around say 43,058 to be precise, that is the first target that we are looking at, and the low would be breached. That also is envisaged. Chances are that we would see a serious correction this time. Our final and third index study is on CNX Midcap. You know that CNX Midcap had been cruising along. It was climbing a mountain like Changabang West Face, almost vertical. It moved up. However, in the last couple of weeks we have seen red candles and it is coming down. Has it seen a top? Is it going to go further down? Where we would say that it has already made a top. Now it is only, what we can say is that possibly a top has been made, but where we can confirm and where we see it become a plausible top formation. Watch out. CNX Midcap, our last and final index study. Here we have given one ellipse at the bottom that is showing how the 14-week RSI is behaving. It has closed at 76.76, pretty much overbought still. But look at the top just above the ellipse. Now look at the proper chart above. There is a rectangle. Within that rectangle there is one there is one green candle followed by a hammer line, a red hammer line, and then the last week had been again a red body. So two bearish candles in succession, and this humongous bull run in all likelihood has come to an end, and some kind of a correction is about to happen in the mid cap. That's kind of indication that we are getting from this chart. If you now switch to the daily chart, what you notice is that again this rectangle, now within this rectangle above the green rectangle, you can see that how after posting a top the CNX Midcap fell, and then this week CNX Midcap just could not stand the bearish pressure. Almost all of the days it closed lower than the previous day. So this is a very weak weekly movement that we have seen in CNX Midcap after a fairly long time. Since since late March, we have never seen this kind of a movement. For last couple of weeks had been a signal that the CNX Midcap is showing a lot of weakness. So book profits in midcap, at least part profits. They are highly overheated. Last week we did a detailed study on the CNX midcap, where we have noted and we have showed that when midcaps go into correction, especially this midcap index, we have seen that 25% correction to about 50% correction, that can happen. That is what the history shows. So you better be aware as to how you deal with the mid cap and small cap stocks. It would be better that you take some profits off the table. Now we are moving to our stock recommendation section. Because of popular demand, I have included 6 stocks this time for review. When I was talking about the bank nifty, I told you that the private sector banks needs to be studied, and I have done that. You will see 2 major private sector bank under consideration, what is happening to them. Apart from that, this time I have included 2 insurance companies in our study. Apart from that, 2 more stocks are there. Keep watching. Our first review stock, Bharat Electronics Limited. Bharat Electronics Limited actually did pretty well from the lows of say in the double digits. This movement has been happening for a fairly long period of time, and it has been a phenomenal run. Now just have a look at the weekly chart, and you can see that way back in 2020, when it started its journey from a level of 30, for all these 4 years there had been a correction last year in 2022 and early part of 2023, but the correction was a very small correction from 110 to about 87 or so, that kind of a correction. And after that again it started moving up, almost like the mid cap index. It was moving up, and we have seen a strange thing. We've observed a strange thing. Look at the box above where the candlesticks are located. Initially I thought that this could be a mistake, and that is 2 red candles and they are of the same size, and is it a recording mistake? But it is trading views chart, so I understood that this is what has happened. Bharat Electronics began the week with a jump, and then thereafter it has started coming down again. But this kind of 2 red candles, and look at the ellipse at the bottom where the 14 RSI clearly shows, despite such huge run up on the upside, but the momentum was diminishing. So there is every possibility that Bharat Electronics is headed further down. You can see that the 20-week moving average, which is located around 125, that level could well be tested, and it can move further down. So at least one thing is very, very clear. One should not be looking for fresh purchases, because this is signaling some kind of a correction, and if it were to fall below the 20-week moving average around 125, then there is a possibility that we can see something like 112.13 levels where the 50-week moving average is located. But if a stock that is now at 136, if it were to go down in a correction to about 115 to 110 kind of range, at least part profit taking on your part could be well advised. So Bharat Electronics looks weak. The blue-eyed boy of the banking sector, HDFC Bank, after the big fall when the merger of HDFC and HDFC Bank had that was announced, we saw this kind of a huge weekly candle, and now last week, the week ending 22nd of September, this has happened. The high was 1655, the low is 1523.75, and it closed at less than 1530, 1529.65 is the close. And look at the whole of 2023. Whole of 2023, it went beyond 1700 on 3 or 4 weeks of all these 9 months. Could not sustain, came down. The chart pattern suggests that this pattern is actually a distribution pattern. And now all the 3 moving averages, weekly moving averages, 9 week, 20 week and 50 week, all of the moving averages have been taken out. Huge volumes have happened this week as well as the last week, and it looks as if people are seeking an exit, and it has closed even below the lower Bollinger Band, a weekly lower Bollinger Band. So it is very weak. It can move further down. Where it can go? It can go to the moving average of 200 week moving average, which is now at 1418. That kind of level might be reached where it may take support, because as we have seen that when it was correcting from in 2022, it almost tested the 200 week moving average, and again there is a possibility that it can retest the 200 week moving average. If it were to go down further, that will be greater weakness sign, but as of now it looks as if it is headed towards the 200 week moving average, which is currently located at 1418. SBI Life, this is our first insurance company stock and the only insurance company stock that is taken this time, which is a review stock. But here we are suggesting that you can think of profit booking because it is showing signs of weakness. There is a bearish engulfing pattern. This bearish engulfing pattern, if it were to fall below 1315, where the 9 week moving average is located, then it would be quite weak. But the real weakness would be seen when the 20 week moving average, which is around say 1276, that is taken out. There is every possibility of that happening because this upswing that has begun from early 2023 this year, and now it is coming to an end. So this is going to be this looks like it is becoming it has the potential. It looks like it has the potential to get into an intermediate term correction, and it may not be a just short term correction. So in this weakness, if you decide to book profits, you can do that as well. Otherwise, at least no fresh purchases are can be considered here. No fresh purchases should be considered here because it is showing weakness. Even the 14 RSI is also suggesting that probably the weakness can magnify going forward. Our fourth stock is a bank stock. It's a leader among the banks, among the private banks. It has performed brilliantly. Throughout this bull run, ICICI Bank has performed very well. There had been sideways movement early last year, that is 2022. From June or July 2022, it started rising. Again, there was a correction, some sideways movement, and finally we have seen that it tested the level of 1004.95 had been the high recorded around 24th of July. That week it was recorded, and now it is showing signs of distribution. It has already broken the 20-week moving average at 924. It has closed below all the moving averages, especially the two weekly moving averages, that is 9-week as well as 20-week moving average. 20-week moving average was at 957 and 9-week was at 965. Both have been taken out this week, and the close had been around 950. In fact, it is now showing weakness. What we would like to highlight here is look at the bottom. When you see the 14 RSI and the ellipse in which the 14 RSI last phase has been recorded or highlighted, shaded, in that you see some kind of head and shoulders pattern. We know that in oscillators like 14 RSI or ROC, these kind of oscillators, we can study patterns there as well. So this also signifies that there is a fall that is lurking. I mean, it can actually start going down. One thing, the fall would be signaled once the 50-week moving average at 909, that level is taken out. But one should book at least part profits, if not the lion's share of profits, because this is a sign that a reversal and intermediate term corrections are about to happen. Our fifth review stock is Larsen & Toubro. Larsen & Toubro, you can see that the weekly chart shows first a spinning top, which actually recorded the top which happened around say 3009, and after that there is a hammer line, but this time the inverse spinning top, and there is a spinning top, and then there is this hammer line. This together suggests an indecision, a lot of hesitation. Could be the doubts are creeping in the minds of the Larsen & Toubro bulls. Here it signals that there is a probable reversal waiting in the corner. Reversal signal will come, because generally this kind of an spinning top followed by a hammer line that constitutes a reversal signal, but that would be confirmed only when the stock falls below 2750, where the 9-week EMA is located. If it were to fall below that, it can move further down. At least a fall to the 20-week moving average of 2529, this level could be tested. So it is worth your while to actually book some profits once the 9-week moving average gets taken out at 2750, you should get out of this position, because it could be a substantial correction, just as you saw between October 2021 to about June 2022. That kind of a correction it is shaping up. Review chart number 6, Lupin. We are using the weekly chart as usual, because this time we have decided to feature weekly charts because they give you a perspective. Now the perspective is very much important, that you have already seen. Lupin, right from late March on its way up, had down weeks, much less compared to the total number of up weeks, in the sense that the higher closes had been recorded. It could be at best 1:3 or around say 1:4 over this 6 months kind of upswing. Now what we see here is that this is somewhat like an evening star. The last 3 weeks, if you look at the candles, two green candles followed by strong red candles, which suggests that there is a probable reversal that is happening. What it shows is that this is likely to test the 9-week exponential moving average around say 1068. Once that gets taken out, it can actually fall further. Of course, there are signals that after this correction, lupin is going to move up again. Why we say that? We say that because the 50-week and 200-week exponential moving average is showing a golden cross. But remember one thing, that whenever this 50-week 200-week golden crosses happen, although after a correction the stock will move up, but that will be the final lap. But suffice it to say that from here one should actually book part profits which one has enjoyed. If one has got into this stock around say 650, 700, anywhere, if you have entered, book part profits, at least say something like 50%. Cover that position close to about say anywhere around 900 or so if it were to go down there, and then ride the last lap. It could be a higher high, or it could be a high that could be around these levels only, about say anywhere between 1100 and 1200. Exit then around that time. If you like my presentation, don't forget to press the like button. Share my channel, share my videos, subscribe to it, and don't forget to press the bell button so that you get the recommendations, you get the notifications from YouTube. Now we are going to the recommendation section. The recommendation section contains 3 stocks. Even in such a situation where the indices are falling, there is so much of weakness, people are taking money off the table, but does that mean that you can't get a buy recommendation? You can't get some good stocks to buy? Yes, there is. There are stocks that are looking pretty good. Now, among them, you have a pen stock, an FMCG major, and one more stock there. Our choices stock this week is Asian Paints. Asian Paints is showing a recovery sign, and in all likelihood Asian Paints might move up from here. This is the only daily chart that we are displaying today. Asian Paints' move is very well amplified by the daily chart. That's why we have used the daily chart out here, and Asian Paints looks pretty good. It has been correcting. It has seen a sharp correction from 3600, nearly 3600 levels to about 3150. That was a considerable fall. After that, there had been a sideways movement, but in this sideways movement, it is trying to cross 3300. It hasn't so far yet, but last week had been a pretty good week. While other stocks suffered, Asian Paints did pretty well, and it closed at 3274. We expect it to move up from here, so that's why we are suggesting a buy here. Asian Paints can move up from here to 33.95 and 35.47. 33.95 is our first target. Our stop loss is 31.85 on closing price basis, and 35.47 is the next target. As usual, we have kept a 6 to 12 months target. that is 35.47. It can move further up, but we are now projecting only up to 35.47 given the current market condition. Second recommended stock is Hindustan Unilever. We have this feeling that when other stocks move down, this was also moving down in the recent past. In fact, it has been falling since early July after testing a high above 2700. Now we tend to think that there is a possibility because of hammer line at the bottom and that tested the lower Bollinger Band. Hindustan Lever might well move up from here, at least on a corrective rally. The reason behind that is, as I said, the hammer line, and then the week ending 15th of September, it posted very strong volume in that week, about 1 crore 21 lakhs 1 crore 20. It posted a volume of 1 crore 21 lakhs, and last week it showed a volume that is somewhat lower. It was 66 lakh 90,000. But Hindustan Lever, there is every possibility that it would actually move up, because if when most of the stocks are going down, sometimes these bellwether stocks people take recourse to as a hedge. So it could act like a hedge, and it can show further upward movement. In this case, we would say that at least the 2600 level, where the 20-week moving average is located, that might be retested. Our recommendation is that buy Hindustan Lever at current prices around, say, 24.82, and keep a stop loss below 24.38 on closing price basis. Targets, yes. First target is 2600, second target is 2707, and the final target is 2745. Because the situation is slightly dicey, I would say 6 to 12 months duration should be considered for this kind of an up move. If that is palatable to you, then you can think of buying it. Our third reco stock and the first insurance company stock, New India Assurance Company. This stock, as you see on the weekly chart, it performed very well. Our recommendation is that at current levels, despite the fact that market is showing weakness, if you have the appetite to buy stocks that are showing positive signs, you can buy with a stop loss below 117 on closing price basis. Targets 175 to about 189, and our time horizon is 6 to 12 months. This is the weekly chart that you can see on the screen. This weekly chart suggests that this New India Assurance, definitely it has the potential. It has the potential to move further up, and chances are that we would see what happened in 2021 when it moved up to 190 plus levels. Similar kind of levels are likely to be rescaled once again. That's what we anticipate. We expect it. There is a probability that despite the fact that when stocks are otherwise moving down, this is along with other PSU stocks is performing pretty well. Last week, that is week ending 15th of September, it closed above the 200 week moving average, and this week it did not fall below that. It is just retesting it. It's a healthy sign, so chances are that you would see New India Assurance performing fairly well. So with the stop loss and the targets, keeping them in mind, you can take a trade out here. Thank you for being with me. You have seen 9 stocks in total. Out of them, 6 are stock reviews, 3 recommendation stocks. apart from the 3 regular indices in detail. I hope you enjoyed it thoroughly.